is not a direct competition in the sense that, to a large extent, the Chinese kind of flows, and most likely China's influenced development banks, multilateral development banks, like the New Development Bank, the Bank of the BRICS, or the AIIB, the Asian Infrastructure Investment Bank, they will focus particularly on infrastructure, like the Belt and Road as well, the project that China has unveiled, connecting physically China and Western Europe and integrating, including parts of Africa, and in a broad sense, encompassing also Latin America. So it's on infrastructure, physical infrastructure, and partially also advanced infrastructure, but because it will include in some areas, particularly telecommunications as well. And to some extent, this has been an area where the existing traditional multilateral development institutions have stayed away. Even when there is a convergence, even when there is a confluence, the examples that I have seen so far, at least in my experience as a vice president and as an executive director at the World Bank, have been more of cooperation than competition, which does not mean that they will not inevitably compete. But for instance, if I may cite one specific example, may I? And then you guys use it if you will. A project of flood management in Manila, capital of the Philippines. The World Bank approved a project of reshuffle of the flood management system in Manila in order to safeguard and help lots of thousands of poor people who live under risk at the margins of the rivers in Manila. And the World Bank, in fact, brought in the same people who had done a similar project in Salvador, capital of the state of Bahia in Brazil, which had the same kind of problems with slums exposed to the floods and so on. A beautiful project, infrastructure related, one of the rare ones at the bank. High standards in terms of environment and social safeguards. And then suddenly the AIIB, the China-led investment bank, knocks on the door and says, "Can I join you guys?" For them, it was a good business because they took a project already prepared, done, well done one. They could incorporate into their portfolio a nice project in terms of environmental and social safeguard quality. It was good for the World Bank because the World Bank has been constrained in its budget envelope of how much money it can lend to each country because of the scarcity of capital. And it was good to the Filipinos because they could double the money in that flood management project. So this is a case that I like to highlight because it shows how cooperation in this case meant a triple win. Will that be the prevailing case? Hopefully. We can only hope that these institutions and these different sources of capital collaborate in terms of harmonization, in terms of adopting similar guidelines when it comes to the requirements associated to projects and so on. That's still, let's say, a road to be crossed in the future.